Hey, what's going on, YouTube? Aaron Yoon coming at you here from New York City. Today we're talking about winning investment strategy basics, just the absolute basics. And it really starts off with do you have a professional winning mindset or do you have a novice losing mindset, which is way more common? If you look here, we have a couple reaching retirement or talking about retirement saying, here's our retirement plan. At age 65, we'll get divorced, then marry other people who planned better. I thought that was pretty hilarious. Although I do think that it is a this is an actual practice. I think oftentimes people don't actually wait till age 65 to do this, to execute this retirement plan. But really, it's meant more as a lighthearted joke so that we can start off a very serious conversation with a little bit of humor. So let's take a look at some actual novice losing mindset examples. But these are all absolutely real posts that I've seen on Facebook groups. So let's go through some of them. I'm going to show you why each one of these is a novice. It reveals novice thinking. And this one should be super obvious because it's right away, gun to your head, CCL or RCL. These two, in case you didn't know, these two are stock symbols for two different cruise lines, Carnival Cruise Lines and Royal Caribbean Cruise Lines. Which one you taking for the long term? What makes this a losing mentality is the fact that you say gun to your head as if to say, which one do you have to pick? And which one are you taking for long term? The other aspect of this being a high probability of a loss is that you're not defining long term. Here's another one. If you had $1 billion to invest now and you had to put it in one stock, which one and when would you buy and sell? The intended message is like, which stock are you absolutely certain about? Which one are you supremely confident about? But there is no such thing. I've worked for a couple of billionaires, and not a single one of them or any of their billionaire friends would put all their money into a single stock, no matter how confident they were. The premise underlying these two questions reveals a novice type of thinking. This one is like, which one do you have to pick? Which one are you holding for an undisclosed arbitrary amount of time? This is a similar type of question with this one. Which one stock would you go all in on? And I see a ton of engagement. So I wonder if, sometimes people just post questions like this as a way of clickbaiting engagement so that their groups perform better. If that's the case, then absolutely they're doing a very good job, because I see a ton of engagement, but with questions like this. Maybe that's a marketing strategy. I don't know. And if you hear people say stuff like this, or if you're thinking this yourself, then it's time to step back and look at the premise that actually is driving the intent of this question. Here's a new one. I hope this one is more of a joke. I'm pretty sure it is. Hi, I'm new to this group. Can someone please give me names of stocks that are guaranteed to go up tomorrow? Guaranteed. It's like, this is already a red flag word right here. Thanks, I just started an account with $2,000. My brother hooked me up with an extra $2,000. I can't afford to lose any of it. Thanks, we'll all make money together. I hope that's a joke. And I think it is. I'm going to give him the benefit of the doubt. It's got kind of funny, gets a lot of social media engagement. But the idea of the word guaranteed, there are no guarantees in the stock market, and in life. There are no guarantees in life, except that one day you will die. I mean, that's pretty much the only guarantee. Not to be morbid or anything, but just to indicate there really is no guarantee here. So the whole game is about managing risk. And in none of these questions is there any mention of risk. There's only mentions of reward, reward, reward. There is no mention of risk management here, which leads me to believe if these are serious questions and not just clickbait for social media engagement, then it leads me to believe that there is novice thinking underlying these three questions so far. Here's a couple more. I'd like to have a good day with the market and make 40,000. What can I do to make that besides dream. You can get a job is what you can do. That if you are thinking and measuring your success in terms of dollars, this is already a red flag, because $40,000 is a piece of cake if you have a $10 million trading account. $40,000 is almost an impossible feat if you have a $100 trading account. So again, this particular question doesn't take into account what you're starting with, what you want to invest in, what your risk management is. All of these underlying questions that are basics of the game of investing and trading in the stock market, they're just completely ignored. It's just about making money. And really, in all seriousness, I don't really blame any of these people for asking the question that they did, because when we're growing up in school, we're taught to think about how much money we can make. In very, very few cases, unless you're taking advanced statistics or something, are you actually looking at the risk portion of the equation. Almost never. And so this person is asking, how can I make $40,000? Just a quick story here about a $40,000, and the reason I picked this particular question is that recently one of the biggest trading schools, called Online Trading Academy, got into a lawsuit with the FTC. The FTC alleged that OTA, for short, has been targeting baby boomers and swindling them and scamming them out of their retirement money with marketing messages like $40,000 in one trade. That kind of a marketing message attracts novice investors who have no real intention of learning and investing time, energy, blood, sweat, and tears to learn a craft and skill set of trading and investing. They saw the 40,000 and clicked and got sucked into their sales funnel, right? Their digital marketing sales funnel, which invites them to a free event and upsell, and next thing you know, they're enrolled in tens of thousands of dollars worth of stock investing, options investing, futures investing classes, all in the hopes of making $40,000 in one shot. And that it doesn't matter how good the education was. If the student is stuck in thinking like, how do I make $40,000 in one shot? This is my dream. How do I make $40,000? It doesn't matter what the quality of the education is. It's falling upon deaf ears. So I think that's what got OTA in trouble. They're attracting a lot of novice thinking investors, and I have to be fair, they didn't really. I don't think they've done anything in their program to address the mentality of how to go from novice thinking into professional-minded thinking. I know they touch upon it, but I mean the results speak for themselves. There's a lawsuit going on right now, so that leads me to believe that they didn't effectively transform their students' mindsets, even if the content of their education was actually really high quality and top notch. Moving on, we have this question here. This is like a lesser degree of a novice question, because this person already bought Amazon at $337, which is great. I wish I did that. They bought 12 shares of Amazon at $337 way back when. Today it's at $2,400 a share. That's a profit of $24,000. Do I sell or do I let it ride? The fact that they had no exit strategy indicates that this is novice level thinking. Yes, even novice doesn't mean losses. Right? I just want to make that clear. Novice level thinking does not mean losses. You can be profitable, like this person was, $24,000. But not knowing how to manage profits is also novice level thinking. So I did see some interesting replies to this. Some people said, the novice level replies were either sell it, take your profits now, or let it ride, Amazon is going to take over the world, or something like that. Both of those would indicate novice level thinking in the reply, in the answer to this question. And you might be thinking, well, wait, so which is it? Which is the professional move? Is it to sell or is it to let it ride? And I want to reiterate, that's not really the point of today's discussion. It's not that, like, the right answer is the professional answer and the wrong answer is the novice answer. The professional would know exactly what to do with however many shares once it hit a certain price. A professional would never even ask this question because they would know, for example, that part of their trading plan is once it hits 2400, they're going to sell half their position, for example. No real right or wrong answer. It's just that the consistency of the execution without letting emotions and indecisiveness creep in is what makes a professional. And questions like this, the thinking in and of itself makes this question a novice level question. I hope I'm not being too much of a negative Nilly here and just really leaning into some of these questions. The point here is that there's a couple of things fundamentally missing here. In almost all these questions, there is no indication of managing risk, as in what am I willing to lose. None of these questions are asking that. It's not even kind of in the realm of the premise of the question. How much am I willing to lose? It's only about how much can I make, which is a losing recipe. That's a gambler's type of mentality almost, or like a lottery ticket buyer's type of mentality. Second, it's okay, well, now that I have a profit, what do I do with it? I don't know what to do. Like, do I take it? Do I not take it? This is a question that should have been answered. Professionals, I shouldn't say should have. I mean, if you want to be a professional, you can, and if you don't have to. That's up to you. So there's no should involved. It's just that, in my experience, professionals answer this question before they even get in a trade. They have a target. It might be for all 12 shares. It might be for a third of the position that they're going to take at $1,000, and another third that they're going to take at $2,000, and they're going to take the remaining at $3,000, for example, right? And that's a long-term trade over a span of a year, or rather several years. All of these questions indicate there is no trade plan. It's just give me the answer to make 40,000. Give me the answer to make money with 2,000. I don't even know how much money. Just I don't want to lose anything. I just want to make money with 2,000. So this is the kind of mentality that you bring into a job when you're applying for a job, and you say like, oh, okay, I'd like to apply for a $40,000 job. I'd like to make a commission of 2,000. Another $2,000, and which is why I can't really hate on it. It's very, very common.